Good afternoon. This is Jason Print with Auto Investment Services, bestroboticadvisor.com. It's Monday afternoon, and Britain voted late on Thursday to essentially leave the European Union. And what I've been focusing on, or what our team has been focusing on, is how the different accounts at Wealthfront, Betterment, and Schwab reacted. We all know, obviously, the markets did terrible on Friday. The Dow lost about 600 points. Monday, this afternoon, last time I looked at it, Dow was down close to 300 points. So maybe about 900 points or so the Dow's lost in the last two trading days. However, when you look at it, things were actually much worse internationally, and things were actually worse than the U.S. in emerging markets as well. And so depending upon the composition of the portfolios and how much exposure we had to the U.S. and how much exposure we had to international and emerging markets, the performance varied drastically. So from the close of business on Thursday afternoon, where we saw the Dow run up about 230 points that day, as many believed Britain was actually going to stay in the EU, until close of business on Friday. So essentially about just one trading day. Betterment, the growth portfolio, which had close to 90%, 89% stock exposure within that, so obviously very growth oriented within that allocation. That portfolio was down about 5% over the course of the trading day. And when you dig underneath the allocation a bit, you'll notice that my portfolio had over 35% in developed international markets, so heavy exposure to the UK, heavy exposure to Japan, and other highly organized countries, but nonetheless, they're outside of the US, and so we saw those take a hit. And then there's about 11% of the portfolio that's in emerging markets, and obviously those are countries which aren't quite yet as developed as the US and some of the more industrialized nations, and therefore those took a hit as well. Not a whole lot of gold exposure, not a whole lot of cash was in that allocation, and like I said, about 89% stocks, and really about half of the stock exposure was either international and emerging markets, and that's why it was down about 5% or so. On the other side, when you look at Schwab, growth portfolio within Schwab as well, and when I aligned these portfolios, when I funded them about a year ago, I used very similar answers to the risk tolerance questionnaire so that I could try and do a complete apples-to-apples comparison. Schwab, on the other hand, has about 7% in cash. Cash is not going to go down when stocks go down, so that acted as a buffer for performance on Friday. Also, there's about a 5.5% allocation to gold. Gold runs up in periods of high uncertainty many times traditionally. So it acts as a flight to safety, if you will. When you see a lot of money coming out of stocks, you'll see money flow into bonds and flow into gold. That's exactly what we saw happen on Friday. Even when we take out the cash exposure, even when we take out the gold exposure, there's only about 13% of the portfolio that was in international in Schwab and only about 7% in emerging markets. So that fared much better on Friday afternoon. The growth allocation with Schwab was down only about 2.5%. If you got $5,000 in these accounts, that's not going to make a big difference. If you got $1 million in a Betterment growth, you lost about $50,000 on Friday. If you got $1 million on a Schwab growth, you only lost about $25,000. So significant difference between the two. Hope you enjoyed this post. More to come. Thank you.